and welcome to Switzer Investing Insights, brought to you by nabtrade. And despite the largest state in Australia being in lockdown, the Aussie share market has maintained its positive tone. Why is the market behaving differently compared to earlier lockdowns? Is it because investors are being patient or can see value and are looking past the lockdown? I asked Jun Bei Lu of Tribeca Alpha Plus whether she agreed and to nominate two lockdown stocks. And so I guess the point would be then, all right, so some of the retailers might be sold off today, but when lockdowns are over and ultimately when the economy reopens better into 2022, hopefully after we've been vaccinated, a lot of these companies look like good value as long as you're patient and you're prepared to wait.
Oh, absolutely. And especially, now it's very different from last year when there was lockdown because we didn't have vaccine and, we don't know when the vaccine might be. But now we have vaccine and we know how recovery across shopping centers, across consumer, people have this V-shaped recovery. So as soon as we come out of this, the recovery will be enormous. And we've seen it. We know that will be the path that we'll take. So I really believe that the investors, you just need to be a little bit more patient as we pass this. As we get to a good vaccination level, these stocks and sectors will get bid up quite aggressively.
Yeah, okay. So one stock you think we should talk about is JB Hi-Fi.
Yeah, it's actually interesting. JB Hi-Fi has been sold off as the reopening in the economy got people excited into the reopening theme, whereas JB Hi-Fi was the beneficiary. And plus, at the same time, the consumer stimulus potentially winding back a little bit here in Australia. Now, of course, JB Hi-Fi is in a good situation at the moment with the Sydney lockdown, and potentially for a prolonged period of time, it certainly benefits a lot of their short-term earnings. And if not to drive more awareness of improving your home office. At the same time, we're expecting government to step up and give more stimulus. So with the inability to travel and a lot of services sectors still in lockdown, I think the consumer is in a good place, consumer sector, and JB Hi-Fi is the one that actually looks pretty good into the reporting season. And earning will, most people expecting earning to fall next year significantly, and I think the people are way too bearish for that kind of forecast.
Yeah, and I guess it's such a quality company, Jun Bei Lu, that if the market goes off it for temporary or momentum reasons, because some fund managers need to make money in the quarter, it gives opportunity for the long-term investor to seize upon a good quality company on the basis that, well, in a year's time, it could easily be 7 to 10% higher.
Absolutely. I absolutely agree. It's a quality company, leader in the consumer electronics. And that's a very exciting consumer space because there's keep getting new products. So there's a structural growth in that space. So, and they're the market leader. And the company is well run, very good margin, very good cash flow, good dividend yield. And it's not expensive. That is the key. In today's market, if you want to buy quality businesses, you have to pay a big multiple for it. Even Woolworth is on a big multiple. So, it's incredibly important to keep that in focus. Yes, earning may be a little bit soft for, 2022, but, on a 2-year view, this is a structural leader.
Okay, let's go to another interesting one. And a lot of people will be surprised because they've often thought, well, the television, the free-to-air television business is really under siege from the Netflixes and all that sort of stuff. But you like Nine Entertainment's NEC.
Absolutely. Look, Nine Entertainment offers great exposure to the current ad market. And not just that, it also offers exposure to Stan, which is a very fast-growing stream service TV. And it's been taking a lot of share. It's been growing really fast. At the same time, it gives you exposure to Domain, which is actually going through a really good purple patch at the moment where the listing is going very strong. Now, Nine has been sold off in just last week or so, simply just on the basis potentially potentially some weakness, in the ad market. But what do you think everyone's doing? Sitting home and watch TV. The feedback we've got from the advertising, especially TV market, has been incredibly strong. Just because people really don't have much places to go to, and all the corporates are spending a lot of money to build its brand to attract that consumer eyeball. So TV is in a good space at the moment, and Stan is offer that good growth, and then Domain is in a very good place as well. So that company is very cheap at this point of the cycle.
And I guess it's fair to say that they are diversified, aren't they? Because they're in radio, they're in real estate, they're in Stan, and of course they're free-to-air as well. So that diversification is pretty important. And also probably radio's suffering a little bit from the fact that if people are at home, they're not stuck in traffic listening to radio, but eventually they will go back to work at least 2 or 3 times a week.
Absolutely. If you look at the number of cars driving on the roads, it's been steadily recovering ever since lockdown last year. Now, this year, Sydney numbers might come off a little bit, but it is a clear trend in a couple of weeks' time, hopefully, that we'll be back on the roads. So all of that just means the increased eyeball and usage for the advertising market. It's in a really sweet spot. Actually for Nine, if you take out the valuation, it holds quite a big portion of Domain. If you take out Domain, you're not really paying much for the TV business at all, plus the radio. So, and it still generates very good cash flow, with a very minimal amount of cost.
That was Jun Bei Lu of Tribeca Alpha Plus. Thanks for joining us on Switzer Investing Insights, brought to you by nabtrade.